Good morning and welcome to today's webinar, which goes by the name Real-Time Daily Trading Ideas. This is our internationally oriented webinar addressed to traders all over the world. We will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. My name is Alex Raftopoulos and I'm very happy to be moderating this webinar. Before we can start with the actual webinar, we will briefly present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to its complex nature. Please make yourself familiar with these instruments by using a demo account if you are a starter. Please feel free to contact us if you need any assistance with that. Please also note that none of this is investment advice. The statements made in this webinar only represent the personal opinion of our traders. You can also find the whole risk disclaimer on our website. Here you can see the schedule for the week. Today it's Dirk's turn. And before I finish off with the introduction, I would like to invite everyone interested in trading to try us out and benefit from the best index and forex offerings with spreads of just 0.8 pips. Please feel free to have a look around our website and explore our international activities, and do not hesitate to contact us should you have any questions. Well, enough of me for the moment. Now it's Dirk's turn. Good morning, Dirk. How are you doing? What's your outlook of the markets for the moment?
Okay, now I got a sign that my voice is uploaded right now. Good morning, Alex.
Good morning.
How are you? Good morning, guys. And let's start into the Friday session. As you already saw yesterday, there must be some reason to implement a sell-off, a huge sell-off. This time it was again the trade conflict, the U.S.-China trade conflict, and just to cite something like for example Larry Kudlow, that's a national economic advisor from the White House, and he said that there is a pretty sizable difference before we get a China trade, a so-called deal. And it looks like Donald Trump and Chinese President Xi Jinping won't meet before that date of the 1st of March. And so it won't be happening anything like that in direction to that special date the U.S. trade guys set for having trade deals. So in the end, that market rush down is nothing like surprising. We spoke about that S&P short last week, as you remember. Of course, the stop loss got hammered out, so this position got smashed out of the system. But in the end, from the direction, it was completely right. Just an overdone movement. The thing is, when we look at the S&P 500 from last week, the thing is just we see this downward trend line, this descending trend line, and now the yesterday's move is just something like a set on this descending trend line, as you can see it right here. And possibly we are going to back up into the direction of that 61.8 level here again. It is not kind of surprising that we have something like a little bit of a correction or consolidation right here. If you remember, January 2019 was the best month, the best performance for the S&P 500 since that disaster year 1987. Sorry. And after such a nice performance, it's nothing wrong with going back down a little bit. Let's just check out a couple of markets. Just because of that huge move from yesterday, we might be looking into some interesting stuff like the bond future, because every time the market is, let's say, crashing a little bit or going down with a huge volatility or going down with huge volumes, they search something for something like a safe haven. So this is the fact that the Eurobond future is something where something like an instrument when you're investing and looking for safety, you're right now still looking for bonds, and on top of that for a couple of other bonds like the Swiss ones, or for example the US ones as well. But just let's check out the levels from that bond future right now. So just to explain that for you guys, you possibly don't know the Eurobond future. What does it say? So the more it goes up, the more the yield of the German bond, 10-year bond, will go down. So if we see something like 167 to 168 level, we will be looking for the 10-year bond yield around a 0%, or sometimes even a negative yield. So if we are rushing up to old levels, we will see negative yields at the German bonds 10-year runners again. The other way around, if we see a descending or a falling Eurobond future, that means that the yield for the 10-year runners from Germany are going up. So if that kind of a little bit of a huge sell-off from yesterday will diminish in the next hours or days to come, that might have an effect on the Eurobond future as well. It might go back down again, and that is the strategy, or something like the trade idea behind that. If you check out these levels from let's say record high down to that last low here, you will find these two lines supported by the 61.8 level, and by the with the last highs here. You see a couple of highs around here, something like that 165, 55ers, and something like we spoke about that before a couple of weeks or last week ago. And of course, if you just check out with a couple of indicators, you might see something like oscillators like the relative strength index. You get a little bit of a hint that this stuff is already overbought. So that overbought territory on the weekly time frame, on top of that, on the weekly time frame, is at 73. So that stuff, of course, could run a little bit more to the north, of course. But in looking for positioning, let's say for positioning for a couple of days, it might be interesting to do that with a two-step strategy. So something like tipping the toe into the water with the first short position, but with a thought to be able to put another position a little bit more north the road if it is possible or still needed. So just deleting that one here. Have more room, and just adding a couple of other indicators before we start into some positioning. You might see that trend lines, of course, that moving average 200, and on top of that, checking out that level of the moving average 100. Where is it? Moving average 100, and using another color, of course. Just checking out if that might be something like green. And just looking for the next, of course, targets to the downside. Changing that one to even to the hourly chart right now, and looking for some movements. If you see the last high to the last low, and we will combine that stuff with the Fibonacci retracements here as well, checking out levels from the last high here and the last low, and of course, taking other colors, just not to confuse you guys with the other Fibonacci levels here, which are already black. So we use red ones here. All right. So let's see where we are right now. So we are definitely scratching that 161 projection here, and that is a possibly nice entry zone for a first setup. Of course, we could check levels up there to 61.8 is above 167.30s, so almost 90 ticks up the road. Changing back to the daily here, or might be right. Just checking out where to combine these two time frames. No, I will do that on the hourly chart, and we'll squeeze that, and we'll just widen it for you guys. And of course, on top of that, showing the market watch here with the Eurobond future about around here, and checking out the level where we might enter right now, looking at the indicator on the hourly basis here as well. checking out the relative strength index again, just to see where it is on the hourly right now, hovering a little bit underneath that 70s, so 68 might be interesting, of course, to get a better let's say step in around that 70s. If you just check in or have patience and try to get a start into that trade in the 70s, 75ers on an hourly basis, that would be more perfect. Of course, you can do that with let's say fishing the top, or let's say picking the points on the top around here. We just will do that one with a two step positioning, and we'll start with one lot selling right now. And on top of that, looking for a stop loss scenario way up the road, in direction to the 167ers, in direction to the 167.50s. Just because of the reason, because we know that we won't be that we do want to be able to put another position on top of that, if that is running in a little bit too much into the red today. Okay, that would be the first position, and we will do that. On the other basis, on the longer term basis as well. Checking out the next level for a next position. Let's just delete that one here, which would be around in the direction of the 167. Let's just check out where the weekly is again. Weekly is at 167, so that would be the middle of. Let's just squeeze that more to the downside here and just delete that RSI. So that might be around the 167.30s level for another position. Of course, we still have that high from why is it not showing that one here right now? It's not working. Oh, so that's 68.82. That was a really huge spike event on that day. That would be definitely too high as a stop loss level, but something around the 167.80s and then 167.90s would be something. The positions are not very big. That is very important to say. You got to watch your margin. You got to watch your position size, and it has to fit. It has to fit to your account size. We can't look into your accounts, of course. So you better be, let's say, really calculate how much you can afford to lose. Of course, you always have to think about it. How much can I lose? How much can I afford to lose? Is it really possible to do something like positioning, like I just gave you the example right now? And is it possible to do that on top, or should you better leave that trade and try to catch a really big move to the upside as well, like we saw that yesterday? Something like that would be another strategy with a little bit more of patience, of course. Other trade scenario is looking back at the market watch and checking out the current currency pair, which got hammered after the Reserve Bank of Australia decided to turn around a little bit. Let's say it that way. We live in, let's say nowadays, in the last weeks, and since the Federal Reserve decided to turn around and is getting more dovish. Other central banks have to, let's say, react and have to steer against that kind of a trend in the central bank policy, and that's the reason the Aussie got hammered down back again, but a little bit overdone in my opinion. So it might be interesting to start to step in with the same strategy with position building into that Aussie to relong. And to, let's say, buy into the oversold territory. You see the last two lows here. You got to see that 170.80, and another one is the 170.75, and that position right now is built with a mini lot right now at the 070.79 is exactly. And the stop loss is, as you can see, almost 100 pips to the downside. Now you might be scratching your heads, asking yourself, why such a huge stop loss? If you build up something like that, you can't build it up with position stop loss stuff like 10 or 20 pips. You can do that later on when you're able to move the stop loss to a little bit more close to the entry, or to the entry, or to the entry after cost, so-called BE, behind entry. And but if you check out a lot of let's say trade advisory from big investment banks and guys, they should know what they're doing, and you see a couple of hundred pips of stop loss room for some trades, just because they want to catch the bigger trend, the bigger picture, and to try catch the bigger move into the next weeks to come. So, and if you look at longer term charts, of course, not only on the daily or 4 hour or 1 hour basis, you see where that came from, and you see where it might get back to. So if you see something like a horizontal line around that last neck here, you see that there is room to let's say a rebound into direction of 0.75 or 0.7498 to be exactly right now. Look at like here, it is 0.75, 0.09, and this one is at 0.75, 0.2. So that would be the next neckline to catch if you just on a so-called rebound trade in a longer term scenario. So that Aussie, looking at a short-term scenario, or let's say the technicals, squeeze that one, and going to the Fibonacci retracements and catching that, that stuff here as well. Let's say we are correct with that one. Again, checking again, 0.70, 75.5, and 0.70, 80. Okay, so that's correct. And if you see there is already a little bit of a room to the 61.8, so I'm using that horizontal line, moving it down to that 61.8, just to show where we are possibly going to 0.7159. And of course, on top of that, checking out the levels to the downside here as well, that would be 138.2 Fibonacci retracement. That is the projection to the downside, which is at 0.6993, or let's say 0.6990s. And that's the reason a little bit underneath of that Fibonacci retracement, there's a stop loss scenario. Of course, you could give it more room if you're able to, or if you have more patience, or if you are convinced that the Aussie might go a little bit more back down the road in direction to that 138.2, you could do the same with positioning the first position build at a level between the 100 Fibonacci and the 138.2 Fibonacci. So that was another possibility to catch this back up again. Okay. Looking into, where is it? The German DAX. Just using an old chart. No, I won't use an old chart. I'm just preparing a new one. Possibly that's better. Just in case there are too much lines, confusing lines and stuff like that. So using that daily, and if you check out the daily, of course, you can see just doing something like drawing this trend line just down the road, not combining too much highs and lows, just to show there is definitely still a huge downtrend, and it doesn't look very, very perfect for the German DAX right now. And you can imagine if there is still nothing like a solution of a trade deal between the US and China. Just think about it. What would happen when Mr. Trump and his fellows are still thinking about having tariffs on the European car sector? Then Germany is, let's say, I'm not using the F word, but in a miserable situation, just because of the German automakers, the car makers are quite heavy, and not only the DAX members, even the rest of the industry, which is very, very reliant on that kind of industry, would suffer, and that would definitely cost us a couple of points of GDP. So in the end, the German DAX is something like a seismograph. Is it the way? I'm not sure about it, Alex. It's really something like an indicator for the all over German industry in that case, and that would be, yeah, let's say, make this number one index from Germany suffer more to the downside. So if we see anything prosperous around the corner, if we see anything more positive from positive news around the corner, there is definitely a huge rebound scenario in direction to that old highs we already saw. That is the level of the 300 and 370s, and that's the last high here, 87. So that's the direction where it should be going back up again. Not easy at all. But if you check out the levels from really even the weekly chart, what is happening now today? I really have some issues with that internet provider here today. Hopefully, Alex, by the way, is there something like disruptions in the voice, or is it clear?
There's partially a couple of disruptions and interruptions, but it's fine. It's fine. Don't worry.
Yeah, okay. It's always nice to know, just because you need to kick these guys. Okay, let's see where we get another level. Some nice levels around, drawing that Fibonacci tools here again, and using that black horizontal line here, where we are already hovering around that 23.6 long term. That long-term Fibonacci is still yeah, let's say it's something like a jump block. It might be giving support right now. Of course, nothing is for free, nothing like Merlin's glass ball in the next hours to come. There could be some story coming out in the next hours, and all this kind of, yeah, let's say, analysis and technical analysis can be dumped into the next data box. All right, checking out those short-term levels and doing that the other way around with another Fibonacci color here as well, like we did that with a German Bund, and doing this way with a black Fibo levels, and just checking out where it might be going to the downside as well, just to show something like a 2 days possible move area. Checking out that one with horizontals here to the 138.6. You see already in down mode already at 9,850s for the first projection at 138.2, and another one at the 161.8 level at 9.6. Nothing like saying that the DAX will go there. No, it's just drawing the projection lines and just showing you guys where the projections are. Nothing like saying that the German DAX might be tanking and going down and targeting those levels. What it could be, what it possibly could be testing is that 61.8 level here, which is at 10,710. Before we go into indicators, just saying that it might be interesting for the German DAX and for a couple of other indices as well, is that the next week from Monday on, that the Chinese markets are returning back after the Lunar Festival. So the Chinese markets like Shanghai, Shenzhen, a couple of other Asian markets like even Hong Kong and South Korea had been partly off. The Chinese markets had been 100% off the whole week. So it might be interesting what is going to happen when they try to absorb or try to react on that kind of the whole weekly move. Is it possible that the heavy injection of the People's Bank of China will lead to a rebound? or even to a more heavy selling. So that might be something like for the first 3, 4, 5 hours of the Monday sessions, just to give you something like a heads up on that story as well. Okay, German DAX and indicators, moving averages. I'm checking out the moving averages here in direction to the 100, and of course to 200. 1 second. And going that with another color. All right. So this is something on top of that where the usual board is always brought up for me. You got the Xetra DAX, you got resistances, and you got the support sphere. And first of all, looking at the support levels, we are not too far away from that 10,934. And something maybe interesting to say, because we don't see something like a gap the last days here. Of course, most important, you look at the daily. There is nothing to see something like a gap here. But if you look at the Xetra DAX, you will see a gap at 10,929.30 to 10,993.83. So that might be something which is still worth a look on, to have a look on to that this kind of Xetra DAX gap is still there. Of course, the future DAX has no gap. Future DAX resistances and supports might be interesting here as well, because the first support of the future DAX March here is at 10,917. So, of course, if you like to check out pivot points, you might check your indicators here at the navigator and find the Admiral pivot, and simply inserting that one. So you have the same stuff here, and you see the resistances and the supports and the pivot point, and you see the support one around the area at 10,914, and you see the resistance, first resistance at 11 to 20s. All right. Okay. Just a short story to the British pound. I'm just checking the market watch here. So where is the pound? The pound, where is this, the euro? Besides, other way around, the euro versus the pound. And the pound versus the dollar. Just checking the level where we are hovering around right now. Sadly, can't find it because I don't trade the cable too much. Where the heck is the cable? Jesus Christ, where's the cable? Ah, there we go. Okay. The current week we had the Bank of England rate decision, and a story, and not even the story. A little bit of research is needed, and a deeper look into that story is possibly needed as well for you guys, because it is very interesting what the Bank of England Governor Carney said about the possible next month and next time to come, just in direction because of the still not solved Brexit situation. And yeah, let's just describe it that way, that the scenarios he just pulled out is something like happening to the UK, like we saw that in the change between 2008 and 2009. So something like a very, very dark picture, nothing like a prosperous picture, nothing like a prosperous forecast. And it really depends how they want to, let's say, stabilize the pound in the next weeks and month to come, to convince international investors and to convince market participants that it still is worth investing in the British pound to the upside, so that a stronger pound is on the roll. And that is something. Are they really able to hike? Is it absolutely needed to hike? And is it is it worth just reading the next month projections and really a full year projection of targeting rate hikes into direction 1.00 or even in the direction to 1.25? So it is not completely off the table. So this is something like a surprise trade. So in my opinion, everybody is talking about the pound much too negative, and it could be very interesting. It could be very interesting to short the euro pound after a spike, because I have the opinion that every time the euro GBP is spiking up in direction something like 0.8810 in direction 0.8860s, that it should be something like an invitation to short again. We will look at the longer term chart here, and we will see that 0.8730s, 0.8750s level is still an interesting and important level, just because if you combine the very long-term chart from the almost parity high here from 2008 to that very strength down to that 0.6935ers, you will see a 61.8 Fibonacci retracement around that level where we are right now. So if that is going to be holding in direction to the Brexit date of 29th of March, we still might be having some kind of explosions to the upside in direction 0.88 to 0.91, of course. But if there is something like a spike happening, this is a 100% invitation for you guys to step in and to place the first shorts. Of course, don't overdo. The positions should be not too big, so you should be able to survive a stop loss event, and you should be able to, even if you like to do that with positioning, to add a position to the downside on top of that. So that's just my opinion. This is nothing like advising. It's nothing like wealth advising or trade advising. It's just an opinion. And that is just the point where I say have a very perfect and prosperous Friday, good trades, and of course a relaxing weekend. Yes, it's your part, Alex. I won't be stealing any kind of words right now. And if there are still some questions, of course, forward them to me.
There is no questions for you at the moment, Dirk. I think
Okay.
you clarified everything good enough. Okay, guys. Thank you very much for your comprehensive analysis, Dirk. Thanks to the audience for listening. I hope you enjoyed today's webinar. If you did enjoy it and would like to review it, you can do so anytime. Just give us an hour or so to upload it onto YouTube. I wish everyone a very good weekend. Thank you very much, Dirk. Bye-bye.
Bye-bye.